Hello and welcome to this interview here on Money Paathshaala. Joining me today is one of India's finest equity minds, someone who has more than 2 decades of experience and has successfully managed wealth of hundreds of thousands of investors over his long journey. He holds the position of CEO and CIO, which is a very rare combination. He is currently with InCred Asset Management, but has worked across leading mutual funds and is now trying to build a new mutual fund house bottom up. Thank you very much, Mrinal Singh, for joining me. It's always a pleasure talking to you. Your Hindi is remarkable, but today we'll stick to English. But I would love to interview you in Hindi as well. I did once, and I found it quite amazing. But my first question to you, lots happening in the stock market since we last spoke. What is your current outlook as far as the equity market is concerned?
Thanks, Vivek, for giving us an opportunity to interact. It's always a pleasure to be able to talk to you. So, the equity markets, obviously they have to reflect upon the economy. They, temporarily disconnect, but the good track. Let me talk about the good part first. The good part is our economy is on a good track. After a very long time, almost a decade, we are seeing capacity addition in the system, and high frequency data is clearly consistently pointing in that direction. I must mention data is particularly like import of capital goods, which is excellent data point, which basically means that capacity is being created in the system. We have also, after almost 10 years, started seeing credit demand in the system. Again, a very good lead indicator for CAPEX. Now, CAPEX, along with import of capital goods, demand for credit, and there have been incentives and schemes like PLI, which have catalyzed in the 13-14 sectors that they are applied to. So these are good signs on the economy. And obviously, market in one form or shape with some lag does reflect that. But then the market, as we stand today, almost at a 4 trillion listed market cap, we are no longer an unknown story in the global landscape. We are a very, very well-known economy. Our growth trajectory might be debated in terms of 6, 7, 8 or some number, but everybody knows that we are the fastest growing large economy in the world for the next 5 years, maybe 10 years, maybe beyond, which has also created a pull for investors. Now, the markets are obviously the way things have got constructed, and we must give credit to the regulator as well as others participants. The markets have been able to smoothly attract a lot of global FPI flows, which starts reflecting, and the data is obviously at a very high frequency share. And the biggest change that has happened in the landscape is in the last 5 to 10 years, the domestic savers have deployed large amount of their savings through largely mutual funds in the equity landscape or equity market. So we now have a very robust, I would say quality and quantity of monies trying to capture the growth potential that the Indian market offers. Now, having said that, a large portion of that money obviously tries to navigate through the options in the largest businesses. And that is what takes the limelight in the press. That is what kind of finds attention in the global scheme of things, because they would like to be in the larger side of businesses. So we periodically see that, the markets remain, at least from a traditional valuation perspective, on a bit elevated side. Some bit of that elevation can be justified from the potential growth that would accrue. But a large portion of that can potentially be accommodating a huge amount of growth that could potentially come across. So I would say the real headline valuation of the broader markets to me looks like being on the steeper side. But then that statement would be, I would say, incomplete without mentioning that there are still pockets which look very interesting within that space, because what we look in the broader market valuation is largely things which are on an average. be it the Nifty or be it anything else, it's basically an average of 50 stocks, or Sensex as average of 30 stocks. It basically means there are 25 stocks beneath and 25 stocks above. So you have to, we are in a zone in the markets, and we've seen them multiple times in the past, where you have to do your work, be selective about what you want to buy based on your research and your assessment of how profits could pan out. And I think you are in for a reasonable return going ahead. A lazy way of investing, trying to replicate the market or doing something, just based on some wish and fancy, I don't think it's going to work. So you will see this question will remain unanswered for a variety of participants. But the reality is, that people who are serious about investing, who go in a methodical, research oriented way, will actually, with patience, display returns. People who are trying to just dump money in the market, trying to see that, okay, fine, we are also present, I don't think that would be a great way of or idea of making money in the market. So,
Mm.
long answer to your question, Vivek, but I hope it addresses.
No, wonderful. Mrinal, how are you seeing the mid cap and the small cap space? I mean, in number terms, it's a very big space.